All right, morning everyone. Welcome to another episode of the Daily High. I will be your only host, Tone Vase, but starting tomorrow on Friday, Matt McGregor will be coming back to the show, coming off his another 1 minute knockout in his latest internationally televised fight, and we are going straight to the charts. Okay, here is the weekly chart where we will begin. We are dealing with a little bit of a pullback, but on a weekly chart, this still looks very clean consolidation. By the way, please let me know how the audio and the video is, because on a solo show, I don't know if things are going wrong or not. And we have consolidation. I really like this consolidation on a weekly scale. We are on an MRI warning candle, which means starting Monday, we will have an MRI top. With the MRI top happening in consolidation, I am encouraged that we are going to go higher. If you look at the last two times we breached 100,000, there was no consolidation. You can see that we only spent about a week and a half above 100,000 and then crashed all the way down to 90, eventually hitting 89 before coming back, breaking 100, spending about a week above 100, and then crashing down, making it all the way into 75. This time around, it is very, very different. We broke 100 back in early May, and we are now going into the middle of July. So, the middle of June. Got my months off a little bit. So we are doing significantly better this time around than either time we got there before. This means that we have a much higher probability of taking another leg higher. Now let's take a look at it on a daily chart, and I'm actually a little more encouraged on the daily chart because after this massive run-up candle that took us to 110,000, we have pulled back and perfectly bounced off of the 20-period moving average. I like the 20-period moving average. You can see that we back tested this 20-period moving average the day after we broke below it, and then we had a more proper pullback, and look at this perfect rejection. So I don't see why the current situation is simply not a mirror image of what happened on June 3rd, when the price of Bitcoin went from 103,000 up to 107,000, where it got rejected by the same moving average and then went lower to 100, bouncing off of the 50 period. This time around, it is just a mirror image of that, and in a advantageous direction to the upside, where we came down from 110,000 down to 107 and perfectly bounced right off that average. So what do we need to confirm this situation? Well, just like in the opposite case, what confirms the rejection of the moving average? Well, it starts with there were three levels to this confirmation. And I will just draw them with a line that I will delete after. So the first level of confirmation is the fact that we closed lower than the prior candle. So obviously, in order for us to mimic this, we would have to close higher than the prior candle. That is going to be very, very tricky to do today, but maybe next week we will get there. That was, in this case, that was level one, and that's a pretty bad level to be at, but it will be the opposite this time if we actually go there. Now, another level of confirmation, and in this case, it actually double confirmed. Obviously, this happened later, but in our case, this second case is going to happen sooner. A lot of it depends on what the candle prior to the rejection candle looked like. So same thing here. What did the candle prior to support look like? So the second level is the candle following this reversal candle closed and traded lower than this candle. So for us, that is what's probably going to come sooner. We would need tomorrow's candle to trade above and close above today's candle, which would mean that it would have to be a bullish green candle tomorrow that completes both of these tasks. Okay, it really depends on what this candle looks like, yesterday's candle, based on which of these levels is going to happen first. But ideally, you have them both for full confidence. But having just one of them is enough to have confidence that we are dealing with a reversal situation. So either today's candle goes all the way up and closes above 110, unlikely, or tomorrow's candle closes and trades above today's candle, more likely. So we just go ahead and wait for that. For now, here in the morning, we survived the 10 a.m. Area. We survived market open, so everything looks pretty good. Looks like we have a spammer and a scammer in the chat. Can moderators solve this problem? Oh wait, I'm sorry. It's not a scammer. These are, it's stocks. It's not. It's not. It's not shitcoins. I really thought it was shitcoins. No, I completely disagree with the view that everything is going to collapse next week. Again, unless a nuclear World War III breaks out next week, I just don't see a structural collapse. This is what happens whenever markets reach new all-time highs. Everyone starts to scream that the markets are going to collapse, and we're not even at new all-time highs yet, but we're close. Gloom and doomers always come out of the woodworks, screaming that uh, the market is going to imminently crash, and then it doesn't, right? So I stopped listening to all these people. I stopped listening to them over a decade ago, and I could not be happier. And I've been right for a decade, and most of them have been wrong for a decade. They were right during COVID, which was obviously artificial, and they were right for 20% during Trump's crazy tariff war. And that's now over as well. So, no, I'm expecting markets to go to new all-time highs, and I'm not expecting any kind of major crash. Well, right, I am the 99% that doesn't see it coming. I'm also the 99% that has been correct for 10 years. So I'm okay with that. I'm perfectly okay being in the 99% of those that don't see it coming if there is a 99% chance that I'm going to be right next week. I have zero problem with that because I am going to be right next week. I wouldn't even say 99. I would say 99.9. Tone, thoughts on sideways summer between 100 and 110? It's possible, but I think there is a higher probability that we break out and come closer to 120 than stay closer to 110 this summer. I can look at a few stocks. We can see the 4-hour chart. Here we are on a reversal with an MRI warning candle. And tomorrow will be an MRI top. MRI buy, MRI bottom, MRI buy opportunity. Not tomorrow, sorry. In 48 minutes, we are on a 4-hour chart. In 48 minutes, hopefully we get that MRI buy opportunity, but you can already see the reversal. On a shorter term time frame, let's see where this reversal took place. The reversal took place around the MRI buy with extension B on the 1 hour. We now have a green star candle. This is looking like a beautiful reversal. Once again, we have a 10 a.m. reversal situation. I'm going to dig a little bit deeper. Let's go to the 10-minute chart. And we reversed at 9:30 actually. This is why I never ever trade the 9:30 a.m. candle. I think it's the most dangerous candle to trade is the 9:30 a.m. candle, whether it's a 5-minute candle, 10-minute candle, 15-minute candle, even up to a 30-minute candle. It is the one candle I will never ever trade in my life because some of the craziest losses I've had as a day trader was trading the 9:30 a.m. candle on a 5, 10, or 15-minute basis. After the first 15 minutes, you can start to consider a trade. You can see that 10 a.m. candle was the breakout candle. It gave us a new 10-minute high close versus early morning hours. We then broke the MRI resistance line on the 10-minute, even though I don't think this is all. Even though I don't think the MRI is all that relevant on such small time frames. And we are currently sitting on an MRI top, but look at this beautiful ascending triangle. Look at this. Look at this beautiful ascending triangle. Okay. And on a 5-minute, it's going to look even cleaner. If I was in a trading competition right now, I would absolutely be going long. I would be in a long trade right now. That is a very, very nice ascending triangle that should be breaking out in the next 5 minutes. I mean, it doesn't have to break out in the next 5 minutes, but based on the chart pattern of a 5-minute ascending triangle, this is should be breaking out in the next 5 to 10 minutes. I'll still be with you in the next 5 to 10 minutes, so we'll keep an eye on this. Quick peek at gold. Well, actually, this is the Bitcoin dominance, which is looking good. Now a quick peek at gold. And look at gold. Gold is breaking out. This is a green star candle on a weekly chart, and it looks very, very good. Now we're back to talking about the S&P 500. You can see the current daily candle is on a green star candle as well. We hit the MRI top. We consolidated for 3 days. We are about to break the MRI acceleration line, and then the MRI resistance line is just another 1% away. I just don't see how the S&P does not go higher and make new all-time highs, probably even later this month. Oh, Prem, that's a great question. Do I think Fed should cut? Let's get back to that in a minute. So here we are with the correlation chart. The S&P is doing well. Bitcoin is lagging a bit. I'm expecting Bitcoin to catch up. And finally, we have our stock chart. Be careful here with ARK Invest coming up on a double top and an MRI top. Wolf, isn't Wolf a miner? I'm not big into miners right now. Wolf Speed, I think it's a Bitcoin miner, right? Correct me if I'm wrong. This looks absolutely terrible. Can you buy this for a dead cat bounce? Maybe, but I don't like to buy. Oh, it's on a monthly MRI buy. I mean, maybe there's something there, but No, not really. No, it's just a total disaster. Terrible. Terrible looking chart. I wouldn't touch it unless they have intellectual property and there is a chance someone's going to buy them out. Oh yeah, there's a whole defense thing going on. You're on the wrong channel. If you want to talk about hypersonic missiles, uh, you're on the wrong channel. You got to follow the tone base channel. Okay, before we look at some charts, let's take a look at Fed, CME, uh, interest rate futures. Okay, so there is a 97% chance that on June 18th, the Fed will not lower the rate. Now, your question was, do I think the Fed should lower the rate? The answer is no, the Fed should raise the interest rate, not lower it. The economy is doing just fine for now. Stock market is doing great. Lowering the interest rate juices the stock market. Why do you want to do that? It's already at all-time highs. You need to normalize the rate, and you need to inform the federal government that they cannot go more into deficit because the interest rate is going to destroy the country. Of course, that's not going to happen, but that's what should happen, right? The current budget for the year will be over $2 trillion, and the only other time that happened was during COVID, which it was a bit of an anomaly with the forced shutdown of the economy. So the Trump administration will put the economy in a much bigger debt than the Biden administration did, and Trump has no desire to live within the budget. He is uh, going to borrow even more than Biden did, and it's all going to implode, but probably not on Trump's presidency. Whoever takes over for him. Now, what the Fed should do, what's best for, uh, well, it depends, right? What's best for the economy, a low interest rate or a high interest rate? I think a normal interest rate is best, and interest rates are still historically low. There is no problem with a 5 or a 6% interest rate, and the Fed is going to do what the free market tells them to do. So if the free market rates are rising, Fed will rise. If the free market rates are falling, Fed would cut. Okay. Now let's look at a few stocks. Let's see PEP. What the hell is PEP? Pepsi Cola? I would never trade Pepsi Cola or Coca Cola. I would have a list of evil companies in this world, and this is one of them, uh, along with Disney and Robinhood. This looks terrible. I mean, yes, it has a weekly MRI top, but you can already see that it's consolidating and forming a descending triangle. I can be wrong. I would rather be short this stock than long this stock, but it's too late to short it at this point. The time to short the stock was when it was breaking this blue line at 160. That was the time to short, or at either of these MRI tops, the all 96 or the secondary high of 182. But the other time to short would be probably around this line, around 163. You also had a dead cat bounce here back into 160, and then another good time to short would have been at 143. We're now sitting at 131. If we start to break below 130, I think that is the last opportunity to short this stock, but I would not be long this stock at this point in time. That's just me. All right, there were other stocks to look at. I don't believe, no, to me, stable coins are not shit coins unless it's they're algorithmic. Algorithmic stable coins are shit coins, fully backed stable coins like Tether and what's the other one? USDC. USDT, USDC are not shit coins, but all the algorithmic bullshit are shit coins. We're not going to get into the details why. When should we expect a 1 to 4 candle on the weekly? Well, starting next week, basically. But it doesn't have to be a pullback. It could be just consolidation. It also doesn't even have to be that. It could just go straight up after. We'll talk about that as we're starting next week, actually. Okay, I'll take a look at a few other stocks. Someone was asking for something with a C. Carvana. I don't really know what Carvana does. CVNA. Oh, I do know what they do. Sorry, that's the car thing. Yeah, I do know what they do. Oh, wow. Okay. We talked about this the other day. What a beautiful weekly MRI top with extension C. Now, on a monthly scale, this is still looking very, very bullish. But on a weekly scale, you are looking at an MRI top that is now going down. Let's look at it on a daily scale. And we had a daily MRI top inside a weekly MRI top. That I really hope you shorted or took profit on this MRI top daily that took place inside the weekly MRI top. That is great. Now, but what do I think is the target for this? Well, I see the target as the next moving average and MRI support line. Hopefully you can get to an MRI buy opportunity, because you have to realize that you are shorting something in a bull market. And shorting something in a bull market is very, very dangerous. You're better off looking for MRI buy opportunities in a bull market than MRI sell opportunities in a bull market. But that is a great trade. Sandsnake, great job. You pulled the trigger, you trusted the indicators, and here you go. Would I short it now? No. But the time to short was right in this zone. MRI tops. You take the chance. You take the swing. ESLOF. I don't know what this is. Did I misspell it? No. I don't. Oh no, it is a stock. Sorry, it's an OTC stock. Why is it on OTC if it's worth $286? I don't know. Look at a beautiful daily MRI top right at the all-time high, and just like magic, absolute magic, the only MRI indication between the all-time high, I'm assuming it's the all-time high, in February of this year, and now, oh no, there's one more, is an MRI buy right at the low, the day after the low, after a massive doji reversal candle on April 8th of this year. And we just had another MRI buy a few days ago. This thing has been consolidating. It's having a very, very bad day. There's got to be some kind of news event. Okay, so that's 7 days ago. I don't know what's happening today. This was yesterday. But this looks bullish to me, though yesterday's candle is troublesome. If we can get over this candle, by the way, this was probably the news that caused it to crash right here. They're buying another company. Whenever a company buys another company, the stock of the company being bought skyrockets, but the stock of the company purchasing tends to go down because it's a risk, and investors see it as a risk. Yeah, this could go higher. I would just wait till it breaks 300, and then this thing can go to 4. On a weekly scale, ooh, MRI top, not at the top, but close enough. And yeah, I would wait for 300. Someone is saying, what if, I saw it somewhere up there, what if like the current holders of Bitcoin start selling? Well, new holders of Bitcoin will start buying. All right, guys, I'm pretty much going to get going. Let me see if there's anything else interesting in the chat. All Bitcoin miners are not doing well. I think the dollar is going to strengthen. I don't think the US government is able to maintain dollar weakness. I should have a DXY chart. Is this it? No. Interesting. It's a long-term look. As you guys know, I've been a big proponent of the US dollar gaining strength, but not yet. Let's see. Let's get to an MRI buy on a weekly scale later this summer, and then I'm expecting it to reverse a bit. Daily, nope. Their US dollar looks very weak right now. All right, I'm going to go through these very, very quickly. Oh, TLT. Haven't looked at that in forever. Well, bonds are rising. That means interest rates are falling. But look, it's a declining trend. I think the bond market will continue to go down as interest rates overall will keep rising. It's just too much of a risk. Another company called Wolf. This looks pretty bullish to me on a daily scale. What a beautiful purchase here off of some MRI buys. This is the daily version. Let's look at the weekly version. Oh, nope. See, this is an MRI top incoming with resistance in a downtrend. This is, I would not go long this stock. I would wait and even potentially short, but you never short $4 stocks. So I would not buy this. The daily looked good, but the weekly is clearly conflicting with the bullish look of the daily. Got a couple of more bit farms. I mean, all Bitcoin mining stocks do not look good right now. The price of Bitcoin would literally need to double for the mining stocks to look good. It isn't a monthly MRI buy, however, so that could be a good sign. We have CRCL, Circle. Oh, they just went public. I got no comment. No comment at all. I would usually wait for a 50% correction, but Bitcoin is hot right now, so no comment. Galaxy. It's neutral on the daily, and it's bullish on the weekly. So there's your view on that. GME. Oh boy. Hits an MRI warning candle, followed by an MRI top, and down we go. You can look at the last time we had an MRI top, and down we went. And is that an MRI buy over here? There's something blocking it. That's alphanumerics. Let me edit that. There's some kind of moving average cross. I have to ask Matt. How do I turn that off? Show arrows. Yeah, that went away. Okay. Yeah, you can see how it went from an MRI top to an MRI buy, and then it went to an MRI top again, and today we're crashing. So we had earnings today, but the MRI warning and the MRI top should have gotten you out of this bullish trade. If you were in this bullish trade past the MRI buy, that wasn't happening in consolidation, that's on you. I would not be long this right now. The weekly chart's looking like a mess. Oh, look at that. Jesus. Here's your MRI top. Here's your another MRI top, but see, this is consolidation. Then you go higher. And then you eventually break the acceleration line with a green star candle. Very bullish. And now it's a disaster. No, I don't think following the VIX will lead you to good trading profits. The VIX is just a reflection of the option markets and whether the option buyers and sellers are scared or not. You can see that the VIX hit an MRI top back in April, and it had an MRI buy right here in May, and another MRI buy just a few days ago. So the VIX is going to be rising, so the markets will have more volatility, and we'll see how it goes. Again, MRI top right here, which means this was an MRI warning candle telling you to get out. I'm not too concerned about the VIX. All right, guys, on this note, I'm going to get going. Thank you so much for watching, and see you all on the next one. I'm back to doing some political commentary on my personal YouTube channel. And we go from there. Tesla is rebounding, looking good. Looking good. Bye, guys.